Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Most investors look at the profit and loss statement only, but what is more significant is the confluence of the profit and loss statement and the balance sheet when it comes to valuations and market cycles. The confluence point is the return on equity or ROE. What is the ROE of Nifty 50 today? And is it cheap for you to buy? Where are we in the current market cycle? Are we going to see a repeat of the 2003-2007 capital market cycle? Answers to these and more in our True Blue webinar. Join us this Saturday, 18th November at 10 a.m.
A week is a very long time in markets. FIIs seem to be selling endlessly. We seem to be facing strong headwinds on inflation front, on exchange rate front, on flows, on trade deficit and on oil prices. But suddenly, it looks like quite a few of these factors are turning. We are seeing oil prices come off sharply. I saw a 5% cut in Brent at the most unexpected of times. We are just getting into winter and you would expect oil prices to be firm, but we saw a sharp sell-off. We'll need to see whether oil prices fall further or stay at these levels or again bounce back. We are seeing FIIs turn buyers in the last few days, which is extremely surprising. Global strategists are aggressively positioning India as an investment opportunity now. So you saw Goldman and Morgan Stanley saying that India should be bought. So FIIs seem to be coming back and buying at least index level stocks. We could see more activity and more clarity emerge in the following weeks. When FIIs turn buyers, the rupee also tends to feel some relief, and we are seeing that now. When the result season is almost over, and when there is no scope for news flows for the coming weeks, we are seeing surprise buying coming in several industry leading stocks and large caps. We saw that spread to mid caps also in the last few sessions. So you are seeing 5% bump up in many stocks at a time when you least expected them. Clearly, there is a sense of urgency not to miss out on buying before the market heads higher. But nobody knows whether the markets are actually heading higher. We have another event ahead of us, which is the election result for the state polls. Market more or less thinks that it won't get a very favorable result. But what if the results are very adverse? Is the market mentally ready to face such a situation? I think not. I think market knows that the results won't be favorable, but is not expecting it to be very adverse. We need to see how the 5 state election results play out and how the market responds to that. We also have the prospect of year-end changes by FIIs and repositioning of their portfolios. That will happen in the first 2 weeks of December. So overall, the market seems to be expecting something and in anticipation of that, rushing to buy. But we don't know whether the market will get what it's expecting. And we could see the markets face what is unexpected. A very interesting setting for the market. But from an investor point of view, it's a setting where one should bring all the patience he has into play and not allow FOMO, the fear of missing out, to control his investment actions. The willingness to wait is very critical now. And anybody who is fearing that he would get left out will probably act in haste and then repent at leisure. That is strictly an avoidable thing in the current market scenario. Thank you for watching this video.